Welcome to Part B of Topic 6 lecture. Here we will focus on the last two learning objectives 4 and 5. Right, so learning objective 4 will look at preparing governmental fund financial statements and government-wide financial statements, and at the same time we will also have an understanding of how to reconcile the two statements. So first up, preparing the government-wide financial statements. All necessary adjusting entries, particularly including depreciation, should be prepared and posted first. Then we will prepare a pre-closing trial balance to provide all the information that is needed for the governmental activities column of the government-wide financial statements. Then all temporary accounts should be closed, and after that we also need to reclassify the three net position balances or net position accounts. So the three net position accounts are the net position for net investment in capital assets, net position restricted, and net position unrestricted. And the government-wide statement of net position and the statement of activities will then be prepared. In terms of the fund financial statements, the fund financial statements are prepared for all governmental funds as well as proprietary funds. The governmental fund financial statements would include the balance sheet, governmental funds, and the statement of revenues, expenditures, and changes in fund balances, governmental funds. I know it's a mouthful, but these are the official terms for the financial statements for funds. Fund balances must be classified according to constraints on their use. And as you remember, GASB has 5 classifications. So you've got the non-spendable, the restricted, committed, assigned, and the unassigned. Only the general fund can have positive unassigned balances. We remember that because all the other restricted, committed, assigned funds are not allowed to have to go into the red. All right, and so it's only the general fund that can have positive unassigned fund balances. Right. So before preparing the government-wide financial statements, we are told in the previous slide that adjusting entries must be made. So how should this adjusting entry look like? Well, using assumed amounts for depreciation and assuming that depreciation is assigned to functions in the amounts as shown in this adjusting entry. So the functions are the general government, public safety, public works, and so forth and so on. So we are assuming that we have been provided with these figures. All right. So depreciation, whether it is building, whether it is equipment and the like, are apportioned to these different government functions. All right. So the journal entry to adjust depreciation would be to debit expenses, general government, using that amount as assumed. Debit also expenses, public safety. Debit also expenses, public works. Expenses, health and welfare, and expenses, culture and recreation for the specified amounts. And your credit would be to the accumulated depreciation buildings, accumulated depreciation equipment, and accumulated depreciation improvements other than buildings for the specific amounts as stated in your depreciation schedule. All right. Once the adjusting entries have been prepared, the pre-closing trial balance can be prepared as well. So this is as shown in illustration 9-2 of your textbook. All right. So as you can see, all the needed information for the governmental activities column of the government-wide financial statements are now provided in the pre-closing trial balance, and this also includes the adjusting entry for depreciation. The complete closing entry to close all the nominal or temporary accounts of the governmental activities general ledger will now be prepared. So once you've got the pre-closing trial balance done, then we can prepare the closing entries. So again, what do we close? The revenue accounts and all the expense accounts will have to be closed. So because the program revenues have credit balances, to close them, they need to be debited. So these figures, program revenues for all the different areas or functions of the government, as well as the general revenues, again, from different areas, property taxes, sales taxes, and so forth and so on, will have to be debited to close them. All right. Then we credit all the expense account. So the expenses in terms of general government, public safety, public works, health and welfare, culture and recreation, and interest on notes payable as well as interest on long-term debt, all expenses will need to be credited because they do have debit balances. Now the difference between the total debit and the total credit in your closing entry will then be close to your net position unrestricted. So from this illustration, it looks like the total debit is lower than the total credit in terms of the closing entry. So what it means is that the expenses are higher than the program revenues and general revenues combined. The difference of your total debit and total credit is close to the net position unrestricted. So $731,771 is the difference between the total debits and credits, and so we are going to debit it to net position unrestricted, thereby reducing the balance of this net position unrestricted account. Now the entries are required to reclassify the three net position accounts to their correct amounts. All right, so if we compare the pre-closing trial balance as well as the statement of net position as of December 31st, 2019. So the statement of net position in the previous year is shown in illustration 4-1 of your textbook. The illustration 9-2 is the pre-closing trial balance that we just have seen. So what we're looking at is the net position for both statements, last year's as well as this year's pre-closing trial balance. So what you'll notice is that the balances between last year's statement of net position and the pre-closing trial balance are the same. See, net position in capital assets, $17,830,018. Same is true in the current year's pre-closing trial balance. The restricted for debt service balance, $77,884, and that's the same in our pre-closing trial balance. The same is true with the unrestricted amount, $408,024, and they are the same. So what does that tell us? It means that we have not updated our net position balances to reflect the changes during the year. So the total amount of capital assets net of accumulated depreciation as of December 31, 2020 is calculated as $19,713,548. Where do we get that figures? If you total up the balances of the four different types of assets that we have: the capital assets, land, buildings, equipment, and improvements other than buildings. So total up all these balances and deduct the accumulated depreciation, you will get 19,713,548. All right. So therefore, the correct balance of your net position, net investment in capital assets must be that amount of 19,713,548 minus the related debt. All right. The debt that is related to it is actually this one here. The current portion of long-term debt, 60,000, plus the bonds payable of 2,640,000. So that's 2.7 million in total. So if you get the difference between 19,713,548 and 2.7 million, you will get 17,013,548. All right. So the difference between the current amount as shown in net investments in capital assets and this figure that we have calculated is 816,470. So that's the adjustment that we need to make for the net position, net investment in capital assets. All right. Before we prepare that reclassification, we also need to make an adjustment to the net position restricted for debt service. Now, your textbook has shown the calculation for this, but it requires going back a few chapters, and so we'll just assume, for the sake of the preparation of the reclassification entry, that the net position restricted for debt service need to be increased by 5,845. All right. And so the reclassification entry would be debiting net position, net investment in capital assets, the one that we've calculated here, 816,470, and credit net position unrestricted for the same amount. To increase our net position restricted for debt service by 5,845, we will take it from the unrestricted net position. So we'll debit net position unrestricted for 5,845 and credit net position restricted for debt service 5,845. Okay. Now, the Town of Brighton's government-wide statement of net position and the statement of activities are presented in 9-3 and 9-4 illustration. So what we are shown in this slide is illustration 9-3, the statement of net position for the Town of Brighton. So what you will notice if you compare this with the trial balance as we have seen in illustration 9-2, it is clear that the financial statement, particularly the statement of net position in this slide, is actually highly condensed. So, for example, have a look at the receivables net amount. All right, that 279,886 there. All right, you would note that that is a highly condensed amount because that includes taxes receivable, that includes interest and penalties receivable, also interest receivable, and it is just shown in one amount and it's net. So when we say net, it means it's net of the related estimated uncollectible amounts. So because the figures provided in the statement of net position as shown here is highly condensed, then there is a need for the details of the receivables and uncollectibles to be disclosed in the notes to the financial statement so that an interested user of this financial report will know the breakdown of this receivables net amount. Now, the two government-wide financial statements, that is the statement of activities and statement of net position also should report amounts for discretely presented component units. In the case of the town of Brighton, they don't have component units, and so you can see that the column for component units, it says none. All right. In order to minimize line item detail in the financial statements and therefore make the financial statements easier to understand, immaterial amounts, that means amounts that are not significant. So immaterial amounts for specific items may be reported with the amounts for broadly similar items. So have a look here, for example, interest and penalties on delinquent taxes, because the amount is only for 11,200. All right. It's actually acceptable to report the relatively small amount of revenue from these interest and penalties on delinquent taxes as part of the revenues from property taxes. All right. Let's go now to the governmental fund statement. The town of Brighton's balance sheet governmental fund is as shown in illustration 9-5. The financial reporting standards, as mentioned earlier, require that fund balances reported be classified according to the constraints classification provided by GASB. So these are the 5 different classifications: non-spendable, restricted, committed, assigned, and unassigned. So the town of Brighton, as you can see here, has 4 of those classifications. They have the restricted for debt service, they have the committed for culture and recreation, assigned for public safety, and of course the unassigned portion. The town of Brighton statement of revenues, expenditures, and changes in fund balances is shown in illustration 9-6. What you can see here is that there are 2 major funds, the general fund and the fire station capital projects fund. This column on other governmental funds represents 2 non-major funds, the serial bond debt service fund and the term bond debt service fund. Because they are non-major, they are just combined and shown under the column headed other governmental funds. All right, let's now go to the reconciliation. Why is there a need to reconcile the amount as shown in the fund financial statements and the governmental activities column? Well, it's mainly because the 2 financial statements, as you know, uses different basis of accounting. So the government-wide financial statement follows the accrual basis of accounting, whereas the fund financial statements actually use the modified basis. And so there will be a number of items that will be recorded in one financial statement but is not recorded in the other financial statement. There would also be some items that are called differently and classified in a different manner. All right, so some of these reconciling items would be the disposition of capital assets, depreciation, capital outlays, any retirement of long-term debt. Interfund transfers would be another one that needs to be reconciled, and so with accrued expenses and the issuance of long-term debt. Now, not all of these items will be present in all circumstances, but most of or any of these could be included in the financial statements, and therefore it needs to be reconciled. All right, so let's have a look at the town of Brighton's balance sheet for governmental funds and also the statement of net position governmental wide. So the reconciliation of balance sheet governmental funds to the statement of net position will start from the total fund balances governmental funds. So where do we get that 361,571? All right, it is actually from the governmental funds balance sheet. 361,571 is shown there. Now we need to reconcile that with this figure, the net position of governmental activities. So this will be found in the statement of net position under the total net position. All right. What are the reconciling items in this case? Some of the reconciling items can be seen in the statement, but others are not. So there will be additional information that has to be provided. I'll point out to you some of the items that you can spot out from these balance sheets. All right. For example, in the capital assets net, as shown in the government-wide statement of net position, we have 19,713,548. And this is one of the reconciling items, because it says here that the capital assets used in governmental activities, government-wide, are not financial resources and therefore not reported in the funds. That makes sense because the fund uses modified accrual basis. All right. Let us also look at the next item, 2.7 long-term liabilities. We can see that in the statement of net position for governmental wide statement. So it's the total of bonds payable, 2.64 million, and the current portion of that long-term debt, 60,000. So that has a total of 2.7 million. We can also see the deferred inflows of resources. This is recorded or as shown in the governmental funds, the amount of 278,286. So notice here that the deferred inflows of resources are recognized as revenues of governmental activities. That means it's actually a revenue in one, but it's not a revenue in the other, in the fund balance. So that needs to be reconciled as well. All right. So in this case, the other two figures, this one, the 28,750, the assets and liabilities of the internal service fund that are included in governmental activities in the statement of net position, will be normally given as additional information. And so with this accrued interest payable, if there are any, it will also be provided as an additional information. All right. Let's have a look at the reconciliation of the statement of revenues, expenditures, and changes in fund balances for governmental funds to the statement of activities in the government-wide financial statement. So we will need the statement of revenues, expenditures, and changes in fund balances for the fund, governmental funds, and also the statement of activities for the town of Brighton. All right. So again, we will start from the net change in fund balances for governmental funds. Where can we find that? 161,687. It's in the total government funds column, and that's the net change in fund balances. All right. Now it needs to be reconciled with the statement of activities figure, and that is the 731,771, the one that we have closed just now in the closing entry. Remember that we have a negative 731,771, and that represents a decrease in the unrestricted net position. All right. Now, many of the reconciling items cannot be easily found in these financial statements. The only one that you could kind of spot out quickly is the proceeds of long-term capital debt, because it is shown as other financing sources in the governmental funds statement, but all the other reconciling items must be provided as additional information. All right. Okay, so I suppose when you're deciding whether to add or deduct the figure is, has this been included in this figure? All right. If it is and it is excluded from the other figure, then you'll need to know whether the reconciling item has been included or not included. All right. So let's just have a look at this example. These are the amounts reported for governmental activities in the statement of activities that are different, all right? Because, number one item, governmental funds report capital outlays as expenditures. However, in the statement of activities, the cost of those assets is allocated over their estimated useful lives as depreciation expense. So this is the amount by which capital outlays exceeded depreciation. All right? So that figure of 261,530 has been deducted from the net change in fund balances for governmental funds, and so we'll need to add it back in order to reconcile it with the governmental activities change in net position. All right. Let's go to the bond proceeds. Bond proceeds provide current financial resources to governmental funds, but issuing debt increases long-term liabilities in the statement of net position. So this is the amount of the proceeds that has been included. So again, this 1.2 million is included in the statement of revenues, expenditures, and change in fund balances for governmental funds, but excluded in the statement of activities. All right. So because it is included in governmental funds but not at governmental wide, we will deduct it. All right. The next item, some expenses reported in the statement of activities do not require the use of current financial resources and therefore are not reported as expenditures in governmental funds. So it's included in the government-wide but not in governmental funds, so we'll have to deduct this particular expense. All right. And then we have these two other information. So some revenues reported in the statement of activities do not provide current financial resources and are not reported as revenues in governmental funds. So because this is revenue reported in government-wide but not in governmental funds, so we'll need to add it to the governmental funds net change in fund balances. And finally, internal service funds are used by management to charge the cost of certain activities to individual funds. The net revenue of the internal service fund is reported with governmental activities, 1,750. So it's reported in governmental wide but not in the governmental funds. So we'll need to add it back in order for it to be reconciled. All right. So once we have done all these reconciling items, we will be able to get to the figure as shown in the government-wide statement of activities. What we're highlighting here obviously are the main reconciling items so that we know the point of differences between the two financial statements. Okay, let's move on to the final learning objective, and this is to identify and explain financial reporting issues and topics. So we'll start with the GASB's financial reporting model improvements for governmental fund. This has been a project that has been going on for a few years now. It was issued in December 2016, and that's when GASB started seeking public comment on 3 different measurement focus and basis of accounting methods. This is undertaken to provide a more conceptually consistent measurement focus and basis of accounting than what is currently provided by the modified accrual basis of accounting. If any of the methods proposed in the preliminary reviews are adopted, there will be a significant impact on the recognition and reporting of the governmental fund transactions. So there may be a need for your textbook to be revised by the time this financial reporting improvements project has been finalized. But as it goes, because of the significant change, the deliberation and the development of this financial reporting model project will probably take a few more years. All right. Now let's look at other topics or reporting issues. There are 3 main topics that are not currently addressed by GASB standards but are of interest to government entities. The first one has to do with popular reports. What are popular reports? These are also known as citizen-centric reports. They provide highly condensed financial information, budget summaries, and narrative descriptions to better communicate financial results. Now, popular reports are considered summary data. Because they are summary data, they don't present even the minimum data required for the complete and fair presentation. So they don't even meet the minimum requirement for general purpose external financial reports. All right. So because they are considered summarized data, they are unaudited. But why do governments provide popular reports? This is because they recognize that most citizens are unable to read or understand the comprehensive annual financial reports. And so popular reports are intended to supplement, not replace CAFRs. Public reports focus on how the information being provided relates to the citizen, and it links the financial information to the government's performance. There has been research conducted that shows that users were more interested in revenue information rather than expenditure information. And so most popular reports will be focusing on the revenue information. The second topic that is being considered is the special purpose frameworks. All right. There are many governments that do not report and maintain their internal accounting records in accordance with the generally accepted accounting principles. So rather than using GAAP, for example, they use a special purpose framework. And this is known as OCBOA, OCBOA, Other Comprehensive Basis of Accounting. There are 4 other bases of accounting other than what is prescribed under GAAP. So as you know, under GAAP we are using the accrual basis and the modified accrual basis. So there are 4 other bases of accounting that are being used under these other comprehensive basis of accounting. So one is of course the cash basis. The other 3 are tax basis, regulatory basis, and contractual basis. The most commonly used bases by governments are cash or the modified cash basis, and the regulatory basis of accounting. If a government, however, uses cash basis, then it is expected to comply with GAAP requirements in financial statement presentation, including the presentation of government-wide and fund financial statements, notes to the financial statements, the RSIs, the required supplementary information, such as management's discussion and analysis, the MD&A, and the like. All right. So even though some governments might be using different accounting bases, they are still required to present their financial statements in accordance with GAAP requirements. All right. The third topic is on the issue of the international accounting standards. Now, in the for-profit businesses and organizations, there is what we call the International Accounting Standards Board that issues international accounting standards, right? Now, in the public sector where governments belong to, there is also an international accounting standard setting body. They are known as the International Public Sector Accounting Standards Board, so IPSASB. This is the board or the body that issues the International Public Sector Accounting Standards. We'll just call it as IPSAS. And they have been adopted by many national governments. The aim of the board is to provide high-quality public sector accounting standards for governments and other public sector organizations around the world. Like its counterpart, the International Accounting Standards Board, the International Public Sector Accounting Standards Board uses due process whenever they are issuing standards. So the due process follows the preparation of an exposure draft. Now, the proposed standard before it is actually issued as a standard will be issued or made available to the public for public comment in the form of exposure draft. Then comments will be received and considered before issuing the final standard. The board has to date issued 40 international public sector accounting standards. The board supports efforts to achieve international convergence of all accounting standards. The board believes that a uniform set of standards used globally by businesses and the public sector entities will increase the quality as well as the transparency of financial reporting and make management more accountable to their constituents. All right. Well, that is it for topic 6. I'd like to end by going back to that Bible verse that I have introduced at the beginning of this lecture and encourage you to be consistent in your effort to do your work. So as the Apostle Paul said, therefore, my beloved brethren, be steadfast, immovable always, abounding in the work of the Lord, knowing that your labor is not in vain in the Lord. I like this quote from Josh Billings. He's actually an American humor writer and lecturer. Josh Billings is just his pen name, but his real name is Henry Wheeler Shaw. This is what he said. Be like a postage stamp. Stick to one thing until you get there. Isn't that wonderful? All right. So even though I realize that there's quite a lot to cover in this first part of your textbook, all right, but we have done it. Chapter 9 wraps up part 1 of your textbook that focuses on the state and local government. So we have looked at the governmental funds, we have looked at the proprietary funds, we have looked at fiduciary funds, and we have looked at the financial reporting of both the governmental wide activities as well as the funds activities. All right, and so this topic clearly wraps up what we have learned for the past 6 weeks, all right, including this week. And so in week 7, our focus will be changing, and of course we will have your first test. All right, so just be prepared, and as always, I'm happy to help in whatever way possible. All right, I'll see you soon.